Welcome to Talk Tickers. We're here to give you the shortcut, the real insights from today's critical earnings calls.
And today, we are diving deep into Kopin Corporation.
That's right, their fourth quarter and full year 2024 earnings call. We'll break down what you need to know.
And Kopin reported, well, a pretty big year, actually. Record annual revenue and orders, the highest they've seen since they divested their HBT business, which was, gosh, over a decade ago now.
A decade, wow. Okay, so this performance, it capped off with a strong Q4.
Very strong Q4. And they've bagged some significant new contracts, too. It really feels like, a potential turning point for them.
A turning point after all that restructuring.
Exactly. The strategic shifts seem to be finally bearing fruit, paying off.
Okay, let's get into those numbers then. What did 2024 look like overall?
Well, for the full year, revenue jumped 25% year over year. Pretty substantial.
25%, okay.
Yeah.
And Q4 specifically?
Q4 was even more impressive. Revenues surged 71% compared to Q4 last year.
71, that's huge.
It really is. It underlines how their sort of focused strategy in these key markets is working.
And it wasn't just the top line, right? Operations saw improvement too.
That's right. Quality rates, for instance, they've significantly improved and, importantly, stabilized.
Stabilized, that's key.
Definitely. And also their cost structure in Q4 started to look, let's say, more normalized.
Normalized how? What drove that?
Mostly lower legal expenses, which had been a drag.
Ah, okay. The legal costs.
Yeah.
And they mentioned automation helping costs going forward.
Yeah, they expect automation initiatives in manufacturing to bring costs down further.
Got it. But there was still a net loss for the year.
Yes. Important to note that the full year net loss was $43.9 million, or 33 cents per share.
Okay, $43.9 million loss. But there's a big one-off item in there, wasn't there?
Exactly. You need to factor in the $24.8 million litigation reserve.
Right, the litigation. So if you pull that out...
And if you exclude that, the adjusted net loss drops to $19.1 million, or 14 cents per share.
14 cents adjusted loss. So quite a significant narrowing then on that adjusted
Huge
basis.
difference, yeah. And they finished the year strong on cash, too.
How much cash?
$36.6 million in cash, equivalents, and marketable securities on the balance sheet.
Okay, $36.6 million. And what are they guiding for 2025 revenue?
They've set guidance between $52 million and $55 million for 2025.
52 to 55 million. All right. So let's unpack the strategy behind all this. It sounds like there's been a lot of internal change.
There really has. The big theme is this One-Copen strategy.
One-Copen, what does that involve?
Well, it led to a major reorganization of their teams in Virginia and also in Europe.
And the goal there? Streamlining.
Pretty much.
Okay.
Trying to get everyone focused, rowing in the same direction, reduce redundancies, make the whole organization more agile.
Makes sense, especially for scaling up.
Absolutely. And it seems tied into how they're handling the supply chain, too.
How so? Was that part of the FabLite strategy they mentioned?
Yes, exactly. Under FabLite, they set up new teams focused on business development, program management, and crucially, quality.
Quality focus, okay. And supply chain specifically. Any changes there?
Yeah, they've onboarded new vendors for OLED and microLED displays.
OLED and microLED for defense applications.
Primarily to diversify the supply chain for US DoD needs, yes. But it also helps them maintain sort of cost-effective supply for their medical and consumer stuff, too.
So diversifying to protect the DoD side, but keeping options open elsewhere. Smart.
Seems that way. And it wasn't just internal stuff.
Oh, what else?
They did a whole rebranding, new website, boosted their marketing, customer service, support. The whole external-facing side got an overhaul, too.
So really a top-to-bottom strategic shift, laying the groundwork, it sounds like.
That's the impression, yeah. Building a foundation for, hopefully, sustained growth and a more resilient business.
Okay, let's talk about tariffs and supply chains directly. Always a tricky area. How are they managing?
Well, one key thing, especially for their government work, is that the contracts allow for price adjustment.
Offset tariff costs.
Exactly.
Yeah.
So that gives them a buffer, a layer of protection against those fluctuations in trade policy.
That's a useful clause to have built in.
Yeah.
What about materials? Component availability?
They seem okay for the near term. They said their raw wafer inventory is enough to support demand for 2025.
So no immediate bottleneck there.
Doesn't sound like it. And that FabLite initiative we mentioned, that started back in 2023.
And the aim was?
A big part of it was specifically to reduce their reliance on supply chains based in Asia.
And has they made progress?
Seems so. They mentioned having dual supply chains up and running for OLED on silicon displays.
Already supporting customers.
Yeah, that's what they said. So, look, no one's totally immune to tariff impacts, right?
Yeah.
But Kopin feels these moves put them in a stronger spot than maybe others.
Right, being proactive. Okay, so let's pivot to the 2025 growth strategy. What are the main pillars?
Well, first off, just continuing to execute on that One-Copen strategy. Keep refining it.
And where are they focusing geographically?
Big emphasis on expanding in the European and Southeast Asian defense markets.
Diversifying beyond the U.S. defense market.
Exactly. They see new global opportunities there, potential for a more balanced growth pipeline. They mentioned seeing more project funding in Europe and Korea specifically.
Interesting. Are they going it alone or looking for partners?
Both. They're actively exploring strategic partnerships in high-growth areas to, speed things up.
Okay. And besides expansion, what else is core to the 25 plan?
Profitable execution. That's key. Making money on the programs they already have.
Right, not just revenue growth, but profitable growth.
And introducing new products successfully, of course. That's always part of the mix.
And you mentioned automation earlier. That seems like a big part of the efficiency drive.
Oh, definitely. They're really pushing AI-assisted automation in their factories.
AI-assisted. What's the goal? Just cost cutting.
It's more about improving overall manufacturing efficiency, boosting the level of automation, and cutting out redundancies. They actually started developing some of these projects back in early 2024.
So this isn't brand new, it's been in the works.
Correct. And they have a near-term milestone, too.
Which is?
They expect to roll out new AI-enabled inspection systems this quarter.
AI inspection. And the aim is more capacity
Without huge headcount increases. That's the plan, which should lead to a better cost structure.
And that helps them hit that big revenue target they mentioned.
Yeah, it all feeds into supporting their goal of hitting at least $75 million in annual revenue by 2027.
$75 million by 2027. Ambitious. Do they have the pipeline to support that kind of growth?
Well, their existing pipeline looks pretty solid. They have programs with congressional budget demand running right through 2030.
Through 2030. That's long-term visibility.
It is, and a lot of their contracts are IDIQ.
Indefinite delivery, indefinite quantity.
Well,
meaning
there's potential for revenue upside beyond what's already firmly booked. It sets up a framework for future orders.
Gotcha. And is the focus still primarily U.S.-based program?
Their top three currently are U.S.-based, yes, and much of the active pipeline is domestic, too. But their facility in Scotland is well-positioned to handle NATO and other European demand.
Right, leveraging that European footprint. Okay, what about the broader market? Are the winds blowing in their favor?
It seems that way, particularly in their core areas. They're seeing increased demand for microdisplays, optics, application-specific solutions.
Across which sectors?
Defense, medical, and industrial. And part of that surge, they noted, is probably linked to the current, geopolitical climate.
Right, increased defense spending globally.
And their customer base seems well positioned to actually use these advanced products effectively.
Defense seems like a really key area for them right now.
Absolutely. The market for soldier-worn visual acuity systems, it's maturing, but it's growing fast.
And Kopin's playing directly in that space.
Very much so. They're pushing their own integrated system called IVS Now.
IVS Now, what does it do?
It offers both daytime and nighttime capabilities. And importantly, it's designed to be compatible with existing gear NVGs, helmet systems.
So easier integration for the soldier.
That's the idea. They mentioned using their ATAC and DVAS solutions with the Wilcox Fusion Clause system sounds like specific tech integrations.
Okay, so IVS Now is a big push. What about R&D beyond that? Anything particularly innovative?
Yes, the neural display technology they talked about sounds pretty cutting edge.
Neural display, what's neural about it?
It has embedded sensors that track eye movement, position, gaze.
Tracking the user's eyes.
Right, and it has onboard AI processing.
AI on the display itself. For what?
To adjust the information displayed in real time based on where you're looking, what's happening around you.
Oh, okay. That sounds advanced. What tech is it based on?
Right now, the demonstrators use OLED on silicon, but they plan a micro-LED version too.
And who's interested in this?
They're seeing significant interest from medical device makers and also consumer spatial computing companies.
Spatial computing, like AR/VR headset.
Exactly. This tech could potentially get rid of the need for all those internal cameras you see in current headsets.
Which could mean smaller, lighter devices.
Potentially, yes. And maybe more power efficient, too. They do have working prototypes.
Operational prototypes exist.
So they say. Expect more details soon, apparently.
Okay, definitely one to watch. Let's shift back to the present orders and recent wins. How did Q1 2025 start off?
Sounds like it started strong. They reported significant order volumes in Q1.
Any specifics announced yet?
They said several new order announcements are coming shortly, but they did highlight some recent wins.
Such as?
A big one. A $14 million purchase order for thermal imaging assemblies.
$14 million. Nice.
Plus another $5 million for the materials needed for that order.
Okay, so $19 million tied to that one deal, effectively. What else?
$4 million in orders for pilot helmet augmented reality systems.
AR for pilots.
And a $2 million follow-on order for helmets, both rotary and fixed-wing applications.
So continued business there.
And then several $1 million in research funding for developing extended reality prototypes, XR work.
All right, a good mix of production orders and R&D funding. Let's dig into the financials a bit more. That 71% Q4 revenue jump, break that down for us.
Okay, so total Q4 revenue was $14.6 million. Product revenue within that was $12.6 million.
And that product revenue growth was driven by defense.
Almost entirely. Defense product revenues nearly doubled year over year in Q4.
Wow. And funded R&D revenue.
That was pretty flat at $1.7 million for the quarter.
Got it. Now costs in Q4. Cost of product revenue.
Came in at $10.6 million. That's about 84% of net product revenues.
And how does that compare?
Much better than Q4 2023 when it was 106%. So definite improvement in efficiency there.
Okay, good progress on margins.
Yeah.
What about operating expenses? R&D.
R&D expenses were up a bit to $3.1 million in Q4.
Why the increase?
Mainly investments in OLED deposition capability over in Europe, plus developing those new displays we talked about.
Strategic investments. And SG&A. Selling, general, and admin.
That actually decreased quite a bit, down to $3.1 million.
And that was mainly the lower legal fees you mentioned earlier.
Exactly. Lower professional fees, mainly legal.
So all that resulted in the lower net loss for the quarter.
Right. Net loss for Q4 was $1.9 million, just 1 cent per share. Compare that to Q4 23, which was a loss of $6.5 million or 6 cents per share.
Big improvement quarter over quarter. Now the full year picture again.
Full year 2024. Total revenues $50.3 million, up 25%.
Driven by.
Product revenues of $43.6 million. And within that, defense product revenues shot up 82%.
82% growth in defense products for the year.
Yeah.
Cost of product revenue for the full year.
Improved to 83% of net product revenues. They benefited from higher volumes, particularly of thermal weapon sights.
Makes sense. Full year R&D.
$9.6 million. That was actually down slightly year over year, mainly because some prior defense program contracts wrapped up. But that was offset somewhat by more spending on internal R&D projects.
Okay, and full year SG&A, that was up, right?
Yes. SG&A was $22.8 million for the full year. That increase was driven by those higher legal and professional fees we talked about earlier, plus some excise taxes.
And that led to the full year net loss of
$43.9 million or 33 cents per share, which again compares to a $19.7 million loss in 2023. But remember that litigation reserve adjustment.
Right. The adjusted loss was much lower at $19.1 million or 14 cents per share.
Got it. And cash flow.
Net cash used in operations for 2024 was about $14.2 million.
Okay. Let's talk gross margin. You said Q4 saw a slight dip.
Yeah, just a little bit. Management pointed to a couple of things.
Likewise.
Some inventory reserves they took on older products.
Yeah.
Stuff in markets that are not really chasing hard in 2025.
Okay. Cleaning up some old inventory. Anything else?
And just some inefficiencies related to scaling up production, still using quite a bit of manual labor.
Right. The growing pains before the automation really kicks in. Exactly. They actually said Q3 2024's gross margin is probably a better indicator of their target range.
And they expect margins to improve in 2025.
Yes. They expect margin expansion through the year as that automation comes online. The goal is to produce more with the current headcount.
More output, same people. That's the leverage.
Plus, they noted Q4 also had some lower margin programs contributing to the revenue mix, which dragged the average down a bit.
Okay. Looking ahead at operating expenses for 2025, what's the guidance?
For SG&A, they're expecting it to land somewhere between $10 and $12 million for the full year.
10 to 12 million SG&A.
And R&D.
Internal R&D is budgeted at around 7% of revenues.
7% reinvestment.
Yeah. And then funded R&D expense, well, that will just vary depending on the revenues from those specific R&D contracts.
Makes sense. Now, there's always talk about government budgets, any impacts seen there, or from that Doge situation they mentioned.
Yeah, we said no impact seen from either government budget cuts or, the Doge situation, whatever the specifics of that were. Okay. Are they banking on any new government funding, CHAPS Act, things like that?
They have significant requests in DPA, CHAPS Act, DIB funding, but none of that is actually baked into their forecasts right now.
So potential upside if that funding comes through?
Could be. They did mention seeing an influx of requests for training and simulation opportunities, especially out of Europe.
Training and simulation. Interesting.
And just generally strong demand growth globally for optics, for soldier systems, and also for drone control, first-person viewer stuff.
Okay. And the order book itself looks?
They described it as significant and steady for 2025 and looking into 2026 as well.
Good visibility then. That One-Copen initiative with the automation, what's the timeline look like? Is it slow and steady?
Sounds more aggressive, actually. They're planning new automation phases basically every quarter.
Every quarter? Wow.
Yeah, the first optical test solution is supposed to go live this quarter.
And the focus is adding capacity, not cutting jobs.
That's what they emphasized. It's about increasing throughput with the existing workforce.
Okay. Last big piece, the lawsuit. The Blue Radios litigation. Any movement there?
No new updates from the Colorado court itself.
But there were filings.
Yes, in Q4. Related to that summary judgment they won in Massachusetts, well, their law firm won, since they got sued too.
Right. What were the filings about?
Apparently pointing out inconsistencies in testimonies, contradictions between the two cases. Those filings are public, on Pacer.
Okay. And Kopin expects Blue Radios to appeal the Massachusetts win.
Yes, they think an appeal is likely.
Any idea on timing for judgments?
Nope, no specific timeline given.
And legal costs going forward. Back to normal soon.
They expect normalized legal expenses in Q1 and Q2 of this year.
And if they have to appeal in Colorado, what's the estimated cost?
They estimated potential appeal cost in Colorado would be under $1 million and a one-time thing.
Sub-million, one time. Okay. So let's try to synthesize all this. For listeners trying to grasp Kopin's position now, what's the big picture?
I think the main story is this pivot they've made towards defense, medical, industrial markets, using their advanced display tech. It really seems to be gaining traction.
The record revenue and orders certainly point that way.
Exactly. And their focus on dual supply chains, domestic manufacturing, that feels like a smart move to de-risk things, given tariffs and, global instability.
Mitigating those external risks.
Right. And the investment in AI automation. That signals a real commitment to profitability and being able to scale up efficiently.
Not just growing, but growing smarter.
Yeah. And then you have the neural display tech that positions them potentially at the forefront of next-gen visual systems. Lots of possibilities there across different sectors.
So future potential beyond the current core business.
Definitely. Add in the strong order book, the pursuit of government funding. The outlook seems pretty positive overall.
But with that one caveat?
The litigation. It's still out there, still introduces an element of risk and uncertainty, even if they sound more confident about their position.
Okay, that's a great summary. Now, time for our favorite speculative segment. This is not financial advice.
The outrageous but plausible trade idea.
Exactly. So, based on everything we've heard about Kopin, their momentum in defense, IVS, now the geopolitical drivers, what's a sideways play?
Okay, here's a thought. Instead of betting directly on Kopin winning against, say, bigger defense contractors, consider looking at the companies supplying the really critical advanced materials, the stuff needed for rugged military-grade displays and optics.
Like specialized coatings, advanced polymers, that kind of thing.
Precisely. These companies are often less visible, kind of behind the scenes.
The picks and shovels of the advanced optics world.
You could put it that way. They stand to benefit significantly from rising defense spending and the specific tech demands of things like soldier visual systems, regardless of whether Kopin or someone else wins the final big contract.
So it's a play on the underlying tech trend in defense optics, leveraging Kopin's market growth but diversifying the company's specific risk.
That's the idea. You're betting on the demand for the ingredients, not just one specific chef. Plausible, maybe even sensible, despite being in the outrageous segment.
I can. A materials play on the future soldier. Interesting angle.
It taps into the broader theme, for sure.
All right, that wraps up our deep dive into Kopin Corporation's latest earnings call. We've hit the key results, the strategies, the potential future catalysts.
We hope this gave you a clear, concise understanding of where Kopin stands and where they might be heading.
What stood out most to you as you listened? Any lingering questions? As always, we encourage you to dig deeper, look at the source materials, and form your own conclusions.
And please remember, everything we discussed here is for informational purposes only. It is definitely not financial advice.
Absolutely. Join us next time on Talk Tickers, where we'll break down another crucial earnings call.